Welcome. You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart for April 17th, 2016. Market Breadth. With this past week's market advance, our Bull Bear Point and Figure ratio at 2.14 rose from 1.58 last week, climbing into strongly bullish territory. The total count of securities in bullish or bearish patterns increased 4% to 3,118. The count of bearish stocks decreased 15%, while the count of stocks in bullish patterns increased 16%. The Pirls PNF Market Breadth Summary Chart shows us a market now 6 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 62 points for the 8th advance in 9 weeks. At a positive 388.70 points, it continues above the June 2014, the November 2014, and February 2015 tops, and below the 2 additional tops above plus 100, as well as continuing above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 128.34. The CCI 20 daily rose from a positive 61.43 last week, continuing outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 9 weeks ago, while the daily CCI 20 began a Woody's uptrend 7 weeks ago. The CCI 20 weekly continues in a Woody's trend down. Now, with 4 consecutive weeks above zero, it rose last week to a positive 56.84 from positive 39.10 and is now outside the plus or minus 50 range for a valid zero-line reject short entry signal. Industry rotation, the last 2 weeks, all of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, KBW Bank has left the bottom 5. S&P Retail has left the bottom 5. Brokers has left the bottom 5. Bearish, computer hardware, disk drives, networkers, and comp tech have entered the bottom 5. Oil has entered the top 5. Gold and silver continues to lead the top 5. REITs has left the top 5. Oil services has left the bottom 5 and entered the top 5. Focus this week from www.zerohedge.com. The collapse of the petrodollar. Oil exporters are dumping U.S. assets at a record pace. The following are some key points. The bottom line is an accelerating reduction in global liquidity. Here's what we said last year. 2 years ago, in hushed tones at first and then ever louder, the financial world began discussing that which shall never be discussed in polite company, the end of the system that according to many has framed and facilitated the U.S. dollar's reserve currency status. The petrodollar, or the world in which oil export countries would recycle the dollars they received in exchange for their oil exports by purchasing more USD-denominated assets, boosting the financial strength of the reserve currency, leading to even higher asset prices and even more USD-denominated purchases, and so forth, in a virtuous, especially if one held US-denominated assets and printed US currency, loop. Few would have believed that the petrodollar did indeed quietly die, although ironically without much input from either Russia or China, and paradoxically mostly as a result of the actions of none other than the Fed itself, with its strong dollar policy, and to a lesser extent Saudi Arabia too, which by glutting the world with crude first intended to crush Putin and subsequently to take out the U.S. crude cost curve, may have plaxicoed both itself and its closest petrodollar trading partner, the U.S. of A. As Reuters reports, for the first time in almost 2 decades, energy exporting countries are set to pull their petrodollars out of world markets this year. Against this backdrop, we bring you the following from Bloomberg, which highlights the fact that oil producers are now liquidating their petrodollar assets at a frenzied pace in the face of today's crude realities. Now that oil prices have dropped by half to $50 a barrel, Saudi Arabia and other commodity-rich nations are fast drawing down those petrodollar reserves. Some nations, such as Angola, are burning through their savings at a record pace, removing a source of liquidity from global markets. If oil and other commodity prices remain depressed, the trend will cut demand for everything from European government debt to U.S. real estate, as producing nations seek to fill holes in their domestic budgets. This is the first time in 20 years that OPEC nations will be sucking liquidity out of the market rather than adding to it through investments, said David Spiegel, head of emerging market sovereign credit research at BNP Paribas SA in London. And so the liquidity drain is on. The only question is how far-reaching the consequences will be. In a very real sense, then, we'd argue that the decline in petrodollar growth is likely to equate to less demand for fixed income securities and make the withdrawal of Fed QE that much more palpable. As we said back in February, few actually grasped the implications of what plunging oil really means in a world in which this most financialized of commodities plays a massive role in both the global economy and capital markets, not to mention in geopolitics, with implications far, far greater than the amateurish, yes, but gas is now cheaper retort. In the end, the real question may be this: what happens socially and politically in EM oil-producing states when, after years of depressed prices, the coffers finally run dry? Here's the schematic again. Thank you for tuning in for this week's Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.